Hi guys, welcome back to another episode. A very important point before we start, everything we discuss in this video can be used for currency trading, stock trading, and crypto because price action stays relatively consistent across different assets. What is the RSI indicator? The RSI stands for Relative Strength Index, and it is a momentum indicator, used in technical analysis that measures the magnitude of recent price changes to identify overbought or oversold conditions in the price of a stock or other assets such as Forex and crypto. The standard is to use 14 periods to calculate the initial RSI value. What does RSI 14 mean? The default RSI setting for the RSI indicator is 14 periods. This means the indicator is calculated using the last 14 candles or the last 14 bars on the price chart. Using a shorter time frame, for example, 5 periods will cause the RSI to reach extreme values above 70 or below 30 more often. Similarly, higher timeframe settings will cause the RSI indicator to reach above 70 or below 30 less frequently. Many traders use this indicator to help identify whether an asset is overbought or oversold. Using this information could determine potential entry and exit trading signals. When you open the RSI indicator, it shows the RSI line in two straight lines, the 70 line and the 30 line. In general, if the RSI is above the 70 line means the market is considered overbought, and if the RSI is below the 30 line indicates the market is considered oversold. So how is the RSI indicator traditionally used? This is what most traders do. When the RSI enter oversold they start buying and entering long positions, expecting the price to go up. When the RSI enter overbought they start selling and entering short positions, expecting the price to go down. Now, here is the problem with using the RSI indicator like this. Notice at this level on price, the RSI has already entered oversold, so if you started to buy and enter long positions, the price would have continued to go against you for quite some time, before it finally reversed. What this means is, in heavily trending markets, the RSI indicator can stay inside the overbought and oversold area, for a long time. As you can see, the RSI indicator can stay in the overbought region for extended periods while the price is in an uptrend. The indicator may also remain in oversold territory for a long time when the price is in a downtrend. And if you keep taking trades only based on the RSI indicator, expecting the price to reverse, you will most likely get a significant amount of losses doing this. Just look at this example. A short here would be a very bad trade, because the price continued to go up aggressively. This can be confusing for new traders, but learning to use the indicator within the right areas will clarify these issues. Also right now, comment below and tell us what video topics you want us to cover, as we always look at the comments to decide what to create next. If you want more videos like this, please smash the like button, subscribe, and turn on the notification bell so you know when new content is released. In the first strategy, we combine double top and double bottom levels with the RSI indicator, and look for areas of confluence between the RSI and strong areas of double top or double bottom levels. For example, an RSI that signals oversold at the 30 level alone can lead to false trade signals. But, if the RSI is at the oversold 30 levels while the price is at a major double top or double bottom gives a much more accurate trade signal. Here is a simple buy example. The RSI indicator hits the 30 level and the price was trading at a double bottom level. This is a no-brainer buy, at an area of confluence. Here is another example of a buy trade. The price came back and formed a double bottom, before the price continued its upward direction. Here is a simple sell example. The RSI indicator hits the 70 level and the price was trading at a double top level. This is a no-brainer sell, at an area of confluence. Here is another example of a sell trade. The price came back and formed a double top, before the price continued its downward direction. In the second RSI strategy, we are combining the RSI with divergences, also called RSI divergence. So what is divergence? Divergence occurs when the price moves in the opposite direction of the RSI indicator, which can then be used as an early indication of a possible trend change. Divergence is one of the most powerful tools for spotting high-quality reversal trades when used correctly. Here's how. So in this uptrend, the price made a higher high, and the RSI made a lower high, which created a divergence and resulted in a reversal of price. So going in the opposite direction. In this downtrend, the price made a lower low, and the RSI made a higher low, which created a divergence and resulted in a reversal of price. But don't trade divergences blindly, we need to look for confirmation from price action before entering a trade. Here the price was in an aggressive downtrend and the RSI formed a divergence. Many traders bought here and got stopped out for a loss very soon, and the price continued to decrease sharply. Because of that, we take divergence combined with confirmation, which means you look for price action after the divergence occurs to confirm that the reversal is real and not a fake out. So let's break this down one time for all. Now, there are many price action strategies to use in combination with divergence, but for this video, we use divergence with a trendline break as confirmation. One great way to do this is to apply a trendline onto the chart, and then wait for the price to break the trendline before entering into a trade, which then confirms the divergence. With that said, in this example, we have a bearish RSI divergence, the price made a higher high, and the RSI made a lower high. A smart entry would be to wait for the price to break the lower trend line, which resulted in the price to decrease sharply. Similarly, in this example, we have a bullish RSI divergence, the price made a lower low, and the RSI made a higher low. A smart entry would be to wait for the price to break the higher trend line, which resulted in the price increase sharply. Here are other examples using this strategy. If you want more videos like this, please smash the like button, subscribe, and turn on the notification bell so you know when new content is released. The third strategy you could use with the RSI is to take a buy and sell signal when the price crosses the RSI 50 level. When the RSI indicator crosses below the 50 line, a sell signal is generated. Similarly, when the RSI indicator crosses above the 50 line, a buy signal is generated. This strategy works best in trending conditions. In this example, you can clearly see some very good signals when the price is trending up. Similarly, in this example, you can clearly see some very good signals when the price is trending down. With that said, be careful using this strategy when markets are corrective and not trending. It will give more false signals and a bigger chance of losses under these conditions. One great way to overcome these problems is to apply the EMA 50 indicator in combination with the RSI. This can indicate the trend direction, if used correctly. When the EMA line is above the price, a downtrend is indicated and we only look for a selling opportunity. Similarly, when the EMA line is below the price, an uptrend is indicated and we only look for a buying opportunity. In this example, the price is below the EMA line and a sell signal is given when the RSI crosses the RSI 50 line from above. In this example, the price is above the EMA line and a buy signal is given when the RSI crosses the RSI 50 line from below. Here are more examples of using this strategy. We hope that you find this video about the RSI indicator to be useful in your trading and for a better understanding of changes in the market. If you watch this video and find it valuable, make sure you share it with a friend who might also be interested in this topic. As always, Give us a like if you learned something new and want to see more videos like this. Subscribe to our channel, and hit the bell to stay notified when we upload new videos. Until next time.